Let's get more on some stocks on the move from Stephanie Hughes of Bloomberg. Stephanie, great to see you. Would you start off with TerraVest? And thanks very much for joining us.
Yeah, of course, Andy. So TerraVest, those shares fell as much as 15% today. And that was the biggest intraday drop since April 2020. So it's been a few years since we've seen a drop of that magnitude. Unsurprisingly, this drop also made it the worst performer on the TSX today. And that's because the Canadian maker of propane and natural gas transport trucks reported first quarter earnings and revenue that fell short of what analysts were expecting. So that revenue of about $234 million missed by a gap of around $30 million. Adjusted earnings also missed by a significant margin there as well. The company also noted that recent tariff announcements add just another layer of uncertainty in the North America's manufacturing center. So that's adding another wrench in the or potential wrench in the operations there. And it's interesting to see this earnings season, in particular, seeing more management and CEOs comment on tariffs in general. Should be noted that TerraVest's manufacturing portfolio is more domestic. It's more focused in Canada, so it does limit it to some of the full brunt of the impacts of tariffs coming from the U.S. So shares have been rallying over the past year, so this could be just seen as a small setback there, but a lot of that, again, comes down to what these tariffs end up looking like and whether it bears the full brunt on TerraVest there, Andy.
And remind us what's going on with Barrick. That company's production set to drop again.
Yeah, but despite that, Barrick Gold shares are up as much as, or over, was biggest gain since last August. And yes, the production goal is set to drop again, but it did report a pretty strong fourth quarter that saw its adjusted earnings of 46 cents per share come ahead of analyst estimates. The adjusted earnings also beat, and that beat was driven by higher gold and copper production in the fourth quarter and for 2024 itself, which had Barrick Gold meeting its guidance for the year, which was a concern for the market at the time. But like you mentioned, 2025 production guidance came in lighter, I should say, than what analysts were hoping for. But TD Cowen analyst Stephen Green said that, or argued that the company might be a little bit conservative in those estimates. So there might be a little bit more bright spots moving forward, but we'll have to see how that unravels. But as we can see, shares are in the green today, Andy.
Stephanie, thanks very much. I want to show a very quick comparative chart comparing Barrick and Newmont and the TSX Gold Index. And you can really see those two giant companies, which have pulled off massive mergers over the past half decade. It's actually 2019, the Randgold and Barrick merger was completed. They have lagged the gold index. So bigger, certainly not better in the gold industry. Stephanie, thank you very much indeed. Stephanie Hughes of Bloomberg.